Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
All right, cool. All right, good deal. So good morning for those on the Pacific Coast, afternoon, evening for those in other areas of the world. I try hard each week to, go through the disclaimers and stuff, and we can only yell from the mountaintops so much, right? So just keep in mind, if you're fairly new to this, I run a call at 10 a.m. on Saturday Pacific time, however that translates into your time around the world. My goal for this call primarily is to keep you guys safe, which is an insurmountable task when it comes to any kind of capital markets trading. But at least to alert about some of the bigger stuff that played out. I talked a little bit on Saturday, if you see at the top here, Chairman Powell speaking on 60 Minutes. I actually watched the interview, and it was really just a softball interview. So, I have a tendency to think in many cases that things are always going to go awry in these news conferences, and it's only because I've been burned in the past by not paying attention to this stuff. So, and my over concernness, if you will, by a lot of these events, I think goes without saying. In the past, a lot of times you'd have some canned or fairly well released presentation, and then the central banker would go and say something completely different. The markets go bananas, right? So didn't really happen on Sunday. So good trading so far, at least from what I can see through the chat windows. I have not been trading the last day or so. I've been tied up with meetings and unfortunately trying to get the TSA pre-screen application process done for myself and the 3 members of my family, so we can get on and off airplanes all around the world. Yay, lots of fun. So coming up as far as news this week, Bank of China, Bank of Canada, we got some events for US dollars. You can see Tuesday here. I talked a little about this on Saturday morning. Rate statement again tomorrow, I should say tonight, from which is technically tomorrow over there. Wednesday, Powell speaking again, so be concerned about this. If you're trading anything Aussie, these are employment changes, big stuff. He's been on a tear, and then it's pulled back. Same thing with the Canadian dollars. A lot that are in drawdown are looking for pullbacks in Canadian pairs. And the patience surrounding those pullbacks in many cases has taken months. So I'm not looking to, again, make up any fantasy world. Some of this stuff can actually take, months to play out. And for the one question I just got, yes, the Q&A window is open. Feel free to post questions there if you guys want to see particular pairs that I'm going to trade, so forth. I don't really have a lot to say today. I've said a ton over the last couple of months. So even though I know it could be a fairly arduous task, if you go through and see, and get, obviously the access to the right Telegram channel center, or go to our Vimo channel, all the links to that are in the back office. So I highly recommend going in. I saw at least 2 or 3 issues last week of people losing money because they had the wrong settings on, and they didn't go through the tutorials in the back office. And then obviously on the opposite side of the coin, from risk management, I was very pleased to see many in some of the chat when they're saying, man, I learned a ton because I just got out of the AP back office. I spent an hour there. I spent 3 hours there, whatever the case. So let's go into some of the currency moves here. Just keep in mind, all my forecasts on currencies are just that, right? Take it with a grain of salt. I could be dead wrong on this, but it's at least give you guys an idea of what I have a feel for is going on in stocks, bonds, Forex and commodity land, right? They all intertwine. So it's important to look at all. S&P 500 largest capitalized companies in the US breaking out 2 new highs to the tune of a pretty decent cup of handle. I'm showing this because this is a pattern that I think you want to recognize, albeit it wasn't a deep cup, but it was a small handle, as you can see here. Here's your cup pattern. These are very powerful breakouts. If they come back and we test this area, it should hold. Otherwise, it was a false breakout. But we've been one time framing up for almost every day since the breakout. All right. Now I want to address first DXY. Here's the bigger picture here. Each of these represents a single day. TradingView.com, it's primary charting platform. This is very affordable. DXY, right on support right here. Just keep in mind, we could peek through this. There's probably a whole bunch of other things lining up here on my dotted line running horizontally here. So just keep that in mind. Also, this cross, which really didn't take much hold, but it did do somewhat of continuing the pattern up and or a couple days later, it crossed back under. So looking at Euro US dollar, same thing. We're up against the exact same. This is almost a completely inverse chart. Most of the DXY's analysis is based upon the euro, right? So it would make sense that this is a completely inversely correlated chart. Up against these lines here, I've talked about this exhaustively. I'm not going to go into too much detail on it. I do want to address GBP CAD because there's been some questions on this. Okay. So what Neo trades, this is daily chart. It's acted quite well. You know, big support right here. Bounced right off it. Had a reversal. So let me see if I can see. It's a little bigger to see here. Had big support, came right off that area. And in all fairness, these squeeze zones, which are an indicator that San has built here, these are fancy triple moving averages. 50, 100, 200 day lines represented by brown, yellow, and green respectively, bouncing off of that point. I think we're probably going to go back down and see the test of this again. GBP USD, this is another one of the big majors, acting quite well inside this zone, which is a smaller subset of a broader zone that you see here. Okay. If we were to break this area, I would expect us to come back down and visit this area. Maybe some stops minorly in this range, but I would expect us to come back down here. Personally, just my own thoughts about the British, actually, let me just do a reset here. Folk getting their act together with Brexit and all that fun stuff. I really don't expect a large sell-off in this. I would expect us to rally back at some point to visit 4,200 area, which is the big one. Long term, on the weekly chart, you can see how big of an area this is. So it rejected it right off the bat. I would imagine if we spend enough time or doji-ish, new word, down at this point here, which is really just an indecision pause, more likely we're going to go back up and visit this area again. So keep that in mind. Okay, GBP USD daily chart. Make sure I got everything straight on my. So I'd expect this thing to hold, maybe go back up and test this other area. Notice when you see technically not four, but when you see a couple of dojis in subsequent printing of a doji, just means it's a couple of days of indecision, right? You usually will go back up and test the other side of the range. Just keep that in mind. GBP CAD, same thing, holding this point. Not much to tell here. CAD CHF. This one's been on a tear. This is an example on the daily chart of Canadian Swiss. I guess you could argue up at the top here at a really stretched move from the abnormal, right? And many times the stretch moves, albeit certainly concerning if your software is taking a whole bunch of trades, as some have, short all the way up this big run up trend. But now we spent, not in the last few days, but we had spent a really good amount of time basing, and now we're reverting back to the mean, right? This almost always happens. The difference between this pattern and any other one that gets really stretched is the time. That's what's the most difficult to forecast. So oftentimes I'm wrong there, but just recognizing this pattern is risk management nuggets for you to absorb, because it allows folks to at least have some patience if they're in drawdown. Because especially if the software in you doesn't have any sort of ability to turn off and on from a trending to a non-trending mode. I mean, obviously it should have been, in my opinion, it should have been in trend mode since this top. Why? Because we peaked out, and now more than likely we're going to have a little bit of reversion back to the mean, which just means it's going to want to pull back to its normal ranges, right? It got outside of the range. It got stretched by that rubber band I talk a lot about. You can use all kinds of stretched based metrics like a Keltner or a Bollinger Band or some sort of standard deviation. They all are nothing more than showing you the outer bands of how stretched any kind of move is. So if you're trading a product like foreign exchange markets or futures or equities, and some cases even certain kinds of bonds, not commodities, many of these are mean reverting, especially if they're super liquid instruments to trade, like a lot of the majors are. So just keep that in mind, just sort of like a technical analysis lesson on why fortitude in drawdowns is difficult to deal with. But at the same time, if you have the patience, it can pay off with at least some pullback, right? And even if this was, some terribly executed martingale strategy, and you had the ability in this entire move up to sort of stomach the drawdowns, personally, I don't think you should have been trading against this kind of move. But here I do, because we capped out. You could see we printed a resistance. Then we had 3 or 4 actually 1, 2, 3, 4, 5, 6. It's 6 days in a row of one time frame. So this pullback should not be that unexpected. It just didn't show that it was going to begin to choose that. So I would have been in trend up. Don't know that I would have recognized it right here, but I certainly on this candle here, I would have made sure the software is in a trending mode if I had the ability to do that with software, and if the software had the trending mode built in, then I would have just rode that up. Probably would have turned it off if I had the manual ability to do that, and let it, just bounce around in some sort of range. Once it broke up above that range, this wasn't really that good of a range, but you can kind of see the little area it was bouncing back and forth between. Some people call this basing. Then once it stretched up again and printed what I ideally would have liked to have seen as an island reversal candle after this, and pulled all the way back down. Now it's a much tougher read as to where it goes. Really is a tough read. I think it's probably 50-50 chance we go back and visit the top and or break lower, especially if we print some dojis around here. Maybe we have indecisions, shorts start piling up, algos, maybe recognizing a whole pool of shorts or stop losses piling up above this area. It's going to go up and get them. USD JPY. Let's take a look. Next request here. And this one's been nothing but trend up until this point right here. So on the 2nd of April, which is essentially 10 days ago, I would have had trend off and meant, but because again, the same story got really stretched, just like I talked about. And now we're more than likely reverting back to the mean. So I would have been in trend mode in almost this entire move. You know, I talk a lot about this, even though some software can or cannot or will not have the ability to do that ever. In some cases, like Dasan with Variable, he's actually rolling the software back because I think he put too many controls on it. It's actually going to be rolling it back to how it traded during our whole beta test period last year, which was a fairly long time. Did really well, and then too many controls were put on it, and he's going to be rolling that back, keeping some of the controls on it, which is cool. What else? Aussie USD, get a request for that. With the question that was just asked about the links, if you just go into the back office, you can see the links to everything. At a minimum, I would subscribe, as you guys see here, to Market Watch channel, which is myself. Remember, it's a new channel, so we have a new Market Watch, and then obviously subscribe to whichever softwares. In some cases, I see a lot of subscribers have a couple of softwares like an Arrow and or a Gearbox, or maybe they're subscribed to Neo and Arrow. Stratamus is coming online soon. Just keep in mind with Stratamus, guys, I know a lot of people in chat are talking a lot about the release and the hold off of the release. Most of it has nothing to do with the software's bot itself. It has to do with the type of accounts that it trades. And Stratamus was developed to trade a cent-based Forex account, right? Not a lot based. So it's needing some conversion over to be able to do that. Now, where he is with that, and how it's going, and you're welcome to go in the Stratamus chat room and Telegram and ask Killian that question. I don't know the answer. CAD JPY, let's take a look at that. I don't think I've looked at that one in a while, have I? And I don't have it in the list. Euro CAD. I think I have that in the list either, do I? Now, here it is. Take a look at Euro CAD first. A daily chart first. So you can see this 4720-ish area is really sort of the edge of the cliff. If you look at it on a weekly chart, you can see how if we actually broke this area, pretty important, right? See this huge, this is what's called a zipper up. I mean, and became on big vol. So whenever you see something like this, it almost tells you that a line in the sand has been drawn among the institutional. Doesn't mean it's going to hold the next time around. So far, the institutional or whatever groups of whoever's in larger players, what we call other time frame players or OTF players, they're defending the area. But if this goes, we're more likely going to see this 4,300-ish, 4,320-ish area. Remember, it's always an area. It's not an exact price target. Just want to stick to just zones that it may trade back towards. Weekly chart. If we drop back to daily on this, which I haven't done much analysis on this. I mean, obviously, this is just another example of the Canadian dollar strengthening in relation to many currencies. This has been trend down, which more than likely has stopped at this point. And now we're just balancing or basing through a period of time. Essentially, this is nothing more than auctioning price between our range high here, which is just right under the 50 mark, all the way down to, you could even say 4,700. CAD JPY, let me pull that up. NZD CAD, I look at that too. GBP NZD real quick before I get on to the next one. Okay, looks like some sort of authorization problem. Let's try this again. Okay. It's logging me out. Let's log in again. And maybe third time is a charm. Notice TradingView, if you guys also have subscribed to this, we were having some server issues this morning. They continue. Now, I haven't looked at this in a long time, but you guys can see how when I looked at it last time, I drew a large trend channel. Okay, we've broken that channel. It's from whole last year in this pair. So once we broke this channel, which was decisively broken right here, by the way, many cases, if there's going to be a snapback, we'll ride the channel a little higher and maybe break back into it. But it looks to me, since the channel's broken, it's a big area of support. So if this 87.39-ish area goes, we're all the way down here. We'll drop all the way down to this zone. Would not want to be. Notice there hasn't been a lot of big rallies, right? This was an overdue move, this entire move down, right? Just crashed right through the channel. So it has to take some time to digest this type of move, right? That's why you're seeing many doji candles in here, in terms of not perfect dojis, but enough indecision with a tight daily range, high and low. Remember the body of the candle? You guys go on my Telegram channel if you want to see how candlestick analysis works, but it's not difficult. You know, if you have a range, you have your wick, upper and lower wicks, and people call them different stuff. I just call it the upper part of the wick. The entire candle is the body of the trading. Opened here, right? Ticked a little bit higher, hence the wick. Traded all the way down, got a little bit lower, hence the smaller wick at the bottom, and then popped back up. That's how the candles formed. It's the exact opposite for a positive day or any kind of green day or whatever this half-ass color of green is. So we did NZD. We did CAD JPY. So should probably leave these currencies in, huh? Almost anything Canadian related, just leave them in the list. All right, so we're gonna need to go to, this is daily chart. It's not really, other than the range, we could see it when we're trading it up here. We need to move to the weekly chart. So this is the big area right here. Not quite made it there yet. Be interested to see how we act when we get up to this area. But notice the channel that I can draw. Let me yeah, a little lower. See how the top, I'm not going to draw the bottom trend channel, but you kind of get the idea. See how we just connect the dots, right? See how when we started to break above this area, important area, again, we're on a weekly, right? So these are real important areas. So it should be no surprise when we sort of creeped up to this. And if you overlay this on the daily, or we draw it to a daily, and I probably need to reset price scale to see this better. Maybe not the best drawing, but as we came through some of these areas, we formed a little bit of a resistance, but then we broke through it. This is the time right here. I just wouldn't want to be short. You know, there's going to be a move higher. We're going to take a broad move. We broke a trend channel on the weekly, right? So for those institutions, family office, hedge funds, whatever, that were looking for that kind of stuff to trade against and or bots that are chasing stops that are placed up in areas, you know, the things are just going to move into this area. So I'd much rather be with this trend on pullbacks, you know, like right here, great entry for this currency, you know, got stretched, right? Broke, came all the way back down, settled at the top range of 6 candles. Am I counting right? Top range is 6 candles, just settled right on this range, right? The buy point was right here. And boom, you had a huge, fairly parabolic move for a shorter swing term trader. This is where I think that, in my opinion, at least with a very small piece of a lot, and obviously this would be a software based and a little bit larger accounts, that a little bit of a piece should be left to run. So the biggest traders in this industry, and this could be a chart pattern, it could be a chart pattern on oil, gold, right? Apple computer, whatever. The key is just recognizing the chart patterns. Broke from a long-term trend, right? Broke another little short-term daily chart trend. Had a number of indecision candles based. Almost a definable line one can draw right here. Right? Traded down against it. This is where you go long. Your stop loss and your risk in these types of trade is very tight. It's essentially right here. Right? So low risk, you're looking for this to extend higher. I actually should take a picture of this because I haven't seen a real good quality teaching lesson like this. So maybe I'll take a snapshot of this here. Bear with me a second here. Very cool. Snapshot live. All right. Let's see what else. Take a quick peek through some stuff I wanted to address. Do note that with the Market Watch with yours truly channel, I'm starting to migrate over a lot of stuff from the previous channel. This one has, we control this channel, myself and a number of other admins on the executive board. So we can do what we want with this channel. We were kind of limited with the other one. So make sure you get the word out because we still need to migrate over a lot of subscribers. So it looks like we have hundreds that have not come over to the Market Watch channel. So make sure you guys make a note of that on your weekly calls with your up and down line teams. It'd be great. And then the other question that I'm going to pose, if you guys want to sort of cast this around as well, I'm not looking to answer a bunch of questions about this, but I have formed almost like a chairman's trading group with the assistance of Ryan Bickle and Nathan, who runs Arrow. What I'm looking for is funded traders. Okay, so traders that have gone out and got funded with an FTMO, and you know, if you guys don't know what that is, you can Google it. But there's a couple of other organizations out there. If you go through a very specific criteria and very specific risk management process, and you complete what they call the combine, if you will, whatever they want to use the term for it. I call it the combine because usually relate everything to the NFL combine, which is like spring training and open doors for anybody, not just superstars coming out of college, right? So same thing has kind of been done by a number of prop shops, which is nothing more than a proprietary firms like a private equity fund or a VC group of guys that have a bunch of capital available to be lent out to be traded, right? So it's almost like the Zoom, if you will, for unaffiliated traders to trade their capital. But I'm looking for FTMO or funded traders to join our group. Our group's about 8 people right now. I'm looking to have the group closer to 20 if that's possible. So I just need you guys to spread the word about funded traders. We're going to be able to pull a lot of really good, it's almost like a board or a chairman's type of board. I think we should be able to pull out some great stories that help the risk management discussion tremendously. So I'll be looking forward to that. Other than that, that's all I have. If you guys don't have any more questions, we can call it early today. Well, I don't know how early 30 minutes is. But cast any questions you have into the Q&A room. Let me just take a look through this news story. Hey, you're welcome. Funded traders, guys. I'm looking for them. Have to be subscribers to Auvoria as well. All right, guys, that is it for yours truly. Be kind to one another. Help out the less fortunate. And I think we'll all get through this pandemic and hopefully be a wiser group for the better. So may the trades be with you guys. Be safe.